Good morning, this is Roberto. This is the Pro Traders Workshop series. Today's lesson is on Monday retracement. Mondays usually are considered a no trade day by most traders, and there's not a lot of activity, not a lot of volume until Tuesday. So what I noticed over the years that Monday seems to be either a take profit day or a reversal or at least a retracement on Monday. So whatever happens on Friday and on this pair, the Euro CAD, markets tend to retrace on Monday, and that's what's happened here. So what I do is I have to qualify the trade. First, I have a stochastics indicator, and the settings are 14, 5, and 3. And I want to make sure that stochastic is oversold on Friday, or at least coming into Monday. It's down low at this 20 level. And then I count the number of pips, so I want to make sure that the market on Friday is put in its daily range. So 170 pips on the pound Canadian dollar is pretty much exceeded its daily range. Then I'm looking for candlestick patterns either on Friday or the opening on Monday. And on Friday I notice we have reversal patterns down here. We have bullish engulfing candle, and price came back down to retest those lows on Friday, never penetrated. So this would be a good candidate. This would qualify for Monday retracement. And I start looking for targets, and I noticed this resistance level up here on Friday. That would pretty much be my target, and I since had exited this trade. It may continue to go north because it's still early. The New York session has not even opened yet, but I didn't want to take a chance for this market to come back down before it goes back up. So this is a typical Monday retracement trade setup. When properly qualified, you can make anywhere from 20 to 50 pips, just depending on the pair and depending how much the market moved on Friday. So the more the market rallied or sold off on Friday, then the bigger the retracement. Let's look at some other pairs. Pound Australian dollar. Same thing. There's the sell-off on Friday, and market put in 170 pips. And then we have candlestick patterns. We have a strong support level down here. We have an inside bar on Friday. Stochastics is oversold, so this also qualifies. Okay. So again, looking for the taking a trade in the opposite direction of Friday. So the market sold off here on Friday, and you're looking to buy on Monday, but you don't necessarily want to stay in the trade for any length of time. Here, notice that stochastics now is overbought. So obviously I would be exiting this trade, and I did after being in for about 3 hours. Notice that price, the oscillator, stochastics oscillator, was overbought, and that would be a good time to exit that trade, because we don't know if it's just going to continue through the New York session. That's around 5 a.m. Eastern, and it's the tail end of the UK Open right now. So we're in an uptrend at the moment, but we're starting to see resistance at these levels. So be wise to take a trade, but exit. You don't want to stay in very long. Sometimes 20, 30 pips is enough for these retracement. This thing went up 76 pips. Let's look at some other pairs. This one, Aussie Yen, is still being market. We have a bearish engulfing candle around the Asian session and put in about 33 pips. And again, just looking for a short 20, 30 pip trade, depending on what happened the previous day. So on Friday, the market rallied about 70 pips. So if I can capture 25 pips when the market put in 70 the previous day, then I'm happy with that. Okay, stochastic was overbought, and that was your trade. So we may not see this turn around and sell off again. So we have a nice bullish engulfing candle, and it's looks like it wants to retest the highs. Pound dollar, same thing. We had a sell-off on Friday, 78 pips, and there's the retracement, 61 pips. Pound yen sold off on Friday. Stochastics was oversold. There, and there's the Monday retracement. And most likely will continue to go north since the market was in an uptrend the previous day and Friday sold off. Now it's continuing to go north. Let's see. Here's the euro pound, and the market sold off on Friday and then found support a few hours ago. Stochastics oversold, but we may not see much of a retracement on this trade simply for the fact that the previous swing low was over here, Friday's swing low, and doesn't have much to go on unless it can break that level of resistance. Then that's not an ideal trade setup. Even though it's oversold, stochastics at 20, the previous day swing points or a support level is right here, and that's where the market's reacting to. So not the best trade to take. Euro USD, same thing. We have markets sold off on Friday. Count the number of pips from the swing high to the swing low, and we about 61 pips. And I took this trade at I noticed that we had sort of like a morning star on Friday, so that would be my support level, and wait for the market to find. During the Asian session, the stochastics indicator was up here, so I couldn't take the trade until stochastics indicator was, almost at least oversold, and that was the entry here. But since we've exited this trade because it's hitting a level of resistance. Okay. Same thing on Euro, USD Swiss going in the opposite direction of the Euro dollar. Market rallied, and stochastics was overbought on Friday, and it's rallied a bit, and then since it's been retracing. This would have been a difficult trade to take if you were trading the Asian session, because the market did rally, trying to retest the highs, and then turned around and retraced. Aussie dollar. Now, this really has not gone anywhere. The inside bar on Friday would have probably been the best time to take this trade, but it is still early, and we haven't seen, the markets haven't opened up in New York, but unless this broke the support level, then I would not take this trade. So coming into New York session, if we have a body of a candle that breaks below the support, then yes, I most likely would take this trade for about 10 or 20 pips. Okay. USD CAD, here's a good trade setup we have. And again, looking for candlestick patterns, reversal patterns would definitely help Monday retracement trade setup. So here's the support. Stop loss would be below Friday's low. And here's your entry right now. We have a hammer, and the market started going. So I would take this trade, and then I would start looking for exits around this level of resistance. Here's Euro Australian dollar. Huge sell-off on Friday, and this chart, this pair is still developing. This Monday retracement is still working out, and hopefully it can get all the way up to this level of resistance, support, turn resistance. So this would be a great trade to take and exiting. So we took this trade down here and exited around 30 pips because it's hitting that central pivot point. That was the first resistance. So it's still early. We still have the New York session, and let's see if this can find support and then turn around and head north. And I think that's it. I think, oh, this is the pound Swiss market. This is not a good qualifier, because on Friday the market did not do anything. It's just consolidated. So I would trade this differently. I start looking for candlestick patterns, and obviously we have two spinning tops, which are indecision candles, and just waiting for the next candle, a candle to either close above or close below the spinning tops. Stochastics is overbought, so I don't trade this as a Monday retracement. I would trade it as based on these candlestick patterns. Look like that. It's hitting a previous Thursday's resistance level and doesn't look like it wants to go up any higher than this. So this would be a good selling opportunity based on what I see on stochastics and the candlestick patterns. And I think that's it. Those are the only trades that I covered. If you'd like to know more of how to trade Monday retracements or any other strategies, just sign up for our Pro Traders Workshop series. There are 7 lessons. They're in our website, and you can contact me through the website if you have any questions. Have a good trading week, and thanks for watching.